My name is Caitlin, Customer Success Manager here at SONAR, and welcome back to With SONAR. This webinar is designed to explore tools and use cases to enhance your overall SONAR experience. Last episode, we went over our new market-level flatbed datasets to help you monitor those flatbed conditions on a more granular level. This week, I'm going to review our latest SITREP on peak season capacity and some ways you can monitor peak season expectations in SONAR to help prepare and plan properly. Now, the latest SITREP can be found at the top of your screen. So once you're logged into SONAR, if you click SITREPs, you will see all of the situational reports that we currently have available. And the one I'm going to cover today is right here, peak season capacity convergence. Now, this is going to break down what we're seeing with current market conditions and what this could mean for expectations as we head later into the year. So the report is going to start off by what we're looking at currently and keeping an eye on those as we head later into the year. So starting off with rejections, which have been a main topic of conversation this year, looking at our legacy OTRI as well as our enhanced STRI. Overall, we are seeing rejections come down from that 4th of July peak. However, these are considered high rejections from a capacity standpoint. We're seeing tighter conditions, especially compared to the last few years. Then when you look at volume, we're showing that volume's up 12% year over year. So that's signaling the market is still in a good spot from a demand aspect, especially, again, when we're looking at the last few years. Then we have fuel, which has remained a catalyst throughout 2026. And most recently with Russia banning diesel exports, this is something to continue to watch closely because we just never know what's going to happen next from a fuel standpoint. We have lots of fuel data sets available within SONAR. This is specifically monitoring the DOE national average. Then lastly, down here, we have imports coming into the port of LAX. So this can show you that first look of demand coming into the West Coast. So you can really monitor when West Coast is spiking up or down for that first look. So that leading indicator before it hits the truckload market. And you can see if there's any fluctuations in that West Coast area. The report is going to go down to which markets we're currently seeing be affected the most. So currently we're seeing this more segmented in the Midwest and Northeast, and the Southeast and West Coast are remaining on the softer side. So this easily allows you to identify where markets are currently seeing the most impact, and in turn, how that affects your network and your business for current state, but also moving later into the year. Then it'll go into what is driving these conditions at a high level. So seeing an earlier peak season arriving and also a little more compressed than what we saw last year. Trade policy, which continues to be ever changing. And then fuel, which I mentioned, has been a catalyst throughout the year. No one expected fuel to really be all over the place this year and extremely elevated. And then with the West Coast imports, we are seeing that increase month over month. And is this more front loading or is it replenishment? Which it seems to be a little bit of both. So really keeping an eye on how that trends as we head later into the year as well. The report is then going to go and break this down to business types so you can really focus on, okay, I'm a shipper, I'm more on the procurement side, and see how this relates to your business and get more segmented in that approach and in turn what you want to do next. Then it's going to finalize with overall conclusions, takeaways from the report. So you can really just put it into a few bullet points for, okay, these are my main focuses, and this is what I need to focus on for the next few months. Now, the SITREP does a really great job of breaking down current expectations. This is going to be more of a snapshot in time from what we're seeing in those July levels. Our goal with these reports is to not only give you an in-depth analysis for what's happening currently, but also pinpointing you for data sets to keep an eye on as we head later into the year. So to make this really easy, I went ahead and created a custom dashboard with some of these data sets. And I'm going to have this linked in the description box below, so you can easily click on this, save it in your My Dashboards, and continue to monitor these data sets as we head later into the year. So I'm going to start off with rejections, which is giving us that capacity insight. This is showing on a national level with a 3-year look back going back to 2023. And current levels are going to be the shaded blue line for 2026. So you can see where we're at for 2026 as of yesterday. And then this yellow line down here at the bottom is going to be those levels that we were seeing last year. So rejections are nearly 3 times where we were at this point last year on a national level. Now, I was talking to Zach Strickland earlier this week, and if you keep an eye on rejections and follow those trends, you can actually get an idea for what to expect, how these are trending through end of year. So if you see the peaks that we had in June, obviously that spike up around the 4th of July, and now we're seeing that seasonal drop off. That is pretty normal. If you look at previous years, we do see the drop off. This is just more exaggerated because rejections are elevated. So if you monitor this trend, you can kind of see where it's planning to land as we head in later to the year. However, even though rejections are dropping down, still extremely elevated compared to previous years, as I've said, but they're not expected to drop below 10% as we head into the end of the year, and probably spiking up even higher as we head into that holiday season. So that's telling me that capacity is still expected to remain on a tighter conditions that we've been seeing majority of 2026 so far, and then likely to be more difficult as we head into the holiday season per normal. Now, another thing that we want to keep an eye on is going to be overall demand. So looking at that truckload volume and how that's trending year over year. So again, going back to 2023 on this chart here, and then the shaded blue line where we're at for 2026 currently. So similar trends to rejections, we are seeing it drop off and kind of level out as we come off the 4th of July holiday. Really want to keep an eye on this to see where it lands and that we're not falling too far below those 2024 and 2023 levels. We're not trying to get back into 2025 volume levels. 2025 was just kind of a abysmal year from a volume perspective. So would like to keep this elevated that we've seen pretty consistently this year. The market has definitely been more driven on the supply side, but if we see any significant shifts from a demand aspect, that could throw another wrench in things for an already interesting year that we've been having. Now, I went ahead and broke down Port of LA imports coming in as well, like we were talking about through the situational report. Just good to get more context, see that year over year change. Now, this one you'll notice is actually down compared to what we've seen previous years. So kind of a different trend than what we're seeing on the truckload side. But this is just going to help us get that first look of demand coming into the West Coast. You'll see we did see imports increase from June, however, still down year over year. You can see in the shaded blue line, it's still pretty below what we were seeing in 2025. Also expected to pull back in August due to the recent tariff deadline. So not showing anything that could cause a significant spike up currently. But this is great to keep an eye on, as I said, for that first look at demand coming into the West Coast and really see if there have been any changes, upticks, downticks, to know how that could affect the West Coast specifically. Lastly, we have rates. Now, rates are always going to be more reactive. Definitely recommend looking at, rejections, volume, and getting more of that leading indicator. But you definitely, rates have been a catalyst as well this year. They have been significantly increasing. So you want to keep an eye on these and how they continue to trend. As I said, rates are significantly up in the last year. So we have spot rates without that fuel surcharge in green here. They're up about 49%. And then we have contract rates in blue, also without that fuel surcharge, and they're trending up 19% in the last year. So definitely seeing some rate movement. This is more driven on the capacity side shrinking instead of overall demand driven. spot rates are coming down, like we're seeing rejections coming off the 4th of July peak there. Expected to get closer to those contract rates in the next month or so, but we also have Labor Day coming up. So keeping an eye on these, that's the beauty of having, our spot rates updating on a daily basis and the real-time data so you can see if anything shifts. But great to keep an eye on, as I said, to see where those spot rates are going to land. Now, as we mentioned in the situational report, this has definitely been more segmented in the Midwest and the Northeast currently. So wanted to throw some market level insights in here as well. So we have our track spot market conditions, which is monitoring those daily spot rate changes from an outbound perspective. This is going to be updated as of yesterday, so more near-term rate fluctuations, but this allows you to easily see how those spot rates are moving in the Midwest and the Northeast, but also across the country. So yeah, those markets have seen more effects currently, but does that continue to be the case, or does this shift to other markets? Do we see the Southeast pick back up, or is the West Coast significantly increasing there? So for us, those shaded in blue are going to be where those spot rates are increasing, and red will be where they're decreasing. So great to look at all markets as a whole and see term shifts. Now, if you want to get even more granular, you can also view lane level rates. So if you have a lane that's been giving you trouble and you really want to dive into this further before we head later into the year to see if you need to make any adjustments, you can use our lane search tool. I just have a Michigan to Pennsylvania lane pulled up currently. So we have spot rates in the last year here in green and contract rates in purple. So you can see as the rates have been moving, we are seeing an increase on the contract side like we are seeing on the national level. And then spot rates, definitely more volatile, but an uptick on the spot side as well. So you can see these are definitely moving closer together, only about $100 spread currently. However, around June when we were seeing rates and rejections spike up overall, definitely a larger spread between the two there. So this allows you to see more granularly, your specific lanes, how those daily spot rate movements are trending. Contract's going to update weekly, and just seeing if you're missing out on any margin or if there's higher rates on the spot market, contract side, and kind of where the sweet spot is as we head in later to the year. Overall, this report and these data sets are going to help you get a better understanding of current conditions and what to keep an eye on as we head into end of year. That way you can make sure to plan properly. Again, the situational report that I covered at the beginning can be found under your SITREPs here, and I'll have a link for this page in the description box below so that you can easily view these data sets if you want to dive further. If you have any questions or if you would like to talk through anything more in depth, you can reach out to us at cs@gosonar.com or your account manager. We're always happy to discuss this further. And I hope you enjoyed this week's episode of With Sonar. If you have any requests for future episodes or anything you'd like to see covered, you can leave it in the comments below. And I hope you have a great week.